headlines, Porsche. I was looking for mine in my stocking, up 21% December auto sales. Ford, 3.5% versus 3.3%, and GM, 7.5% versus 4.3%. So pretty good there. David Cole's been following Detroit for years. He's been waiting for pretty good statistics. David with the Center for Automotive Research. David, good noon to you.
Good noon to you too, Tom.
And you'll get the Chrysler banner there as well. These are good numbers, David. What do they signal for Detroit?
Well, I think a lot of positive news, but we have to put this in a framework that says that we are coming from a very, very deep bottom. In fact, we are still at what I would say is a depression level of auto sales. But what they have done is so dramatically drop their break-even point that they're becoming profitable at an amazingly low level of sales. But what we see is this gradual growth continuing for some time, and that's going to be very good news, I think, for the industry.
Here's 16 million, a distant memory, total U.S. auto sales. Everybody in Detroit's got this chart tattooed to their brain. You can see the spikes there when they get gimmicky. We come down. What is your new normal level here, David Cole? Is it 15 million? Is it 14 million?
Well, it's very hard to define what it's going to be because of the variables, whether it's gasoline prices or the consumer optimism. Basically, what we expect if things stay on the course that we're on right now is fairly gradual growth. There are some people think if we see an uptick in consumer optimism, we could get past 14 pretty quickly, but that's probably wishful thinking right now.
Let's go to this, folks. This morning on Bloomberg Surveillance, Bloomberg Radio Worldwide, I spoke with Rebecca Lindland of IHS Automotive, and I asked her her outlook for U.S. auto sales.
The fact that we're excited that 2010 may come in at about 11.5 million units, which is a 10% increase over last year, is still 5 million units lower than we sold in 2007. So, we're nowhere close to being at full recovery, and we have to look at job creation. We've got to get people back to work.
Rebecca Lindland there. David Cole, is that what you're watching? Do we just simply need a better unemployment picture to get us back to good numbers?
I think that's part of it. A great many people that are unemployed or underemployed probably wouldn't buy new cars anyway. There are plenty of people with the money to buy cars, and we have seen some reduction in the credit requirements with a new car purchase. That's positive, but it's consumer optimism. If they think that tomorrow is going to be better than today, I think we'll see a continuing uptick. If that optimism were to grow pretty dramatically, I think we could see a very positive trend. The big news, though, to me in this industry is that the profitability at a depression level of sales. It's been an amazing period of restructuring for the industry, something we have never seen in the history of this industry before.
Folks, there's moments in you do this day after day where you do interviews where something just is crystal clear. 3 or 4 years ago at the North American Auto Show in Detroit, Ken Pruitt and I on radio interviewed the chairman of Borg Warner. And David Cole, you look at the chart for Borg Warner, bring this up now, buy straw transmissions in winter. David Cole, why didn't you tell me to buy 100,000 shares of Borg Warner 3 or 4 years ago? What a moonshot. I mean, Borg Warner is a metaphor for auto suppliers, isn't it?
Oh, it really is. I know the CEO very well. Tim Manganello is a good friend, and he's a very, very creative guy. They've got a solid foundation in the industry. They work globally, but they're not unique. I mean, we have seen some dramatic recovery. For example, Arvind Mirador got down to a little over 30 cents a share back in the depths of the Depression when everybody was expecting more bankruptcies, and they're trading up in the high teens today. So what we're seeing is that the strong companies that survive this period are now have cut their break-even points down to the point where they're becoming very profitable very fast. And I think this is going to be a great story out of the industry for some time, is this with this depressed break-even point. They've really learned how to run their business far more effectively and efficiently, and I think that's going to be an industry, the whole industry, not just manufacturers, but key suppliers, are going to be far more profitable than we have expected based on history.
David Rebecca Lindland was talking about Porsche coming back to the Detroit Auto Show this year. How is the competition from Europe? Is it more competitive than it was, say, 4 years ago, or is it less competitive now with fewer players?
I think the competition is just still overwhelming. You would probably have to say there are too many players in the business.
Right.
But what we're entering is a period where there's a decided shift in the psychology. And we have had for over 10 years what we would think of as a classic buyer's market, where the real price of cars and trucks has actually declined. Now what we're shifting to is leaders of the industry that are saying we're not going to push, we're going to wait for the pull. We're not going to let inventories balloon out of proportion to demand. When the customers want our products, we're going to have them, but we're not going to have this 150 days of inventory that we saw a couple of years ago. And so the end of, I think, the classic buyer's market is in sight. We're not going to see incentives disappear, but if you can just hone down those incentives by a reasonable amount, what that does is drop an enormous amount of profit to the bottom line.
I want to go to China here, David Coles. We finish up with you. The Shanghai video, Buick, it's too much I can get that out. 3, 2, 1. It's too much information, and it's the Shanghai video, and it says Buick. You know, David, I've talked about this before. China auto production is just fabulous. Do we need to fear Chinese manufacturing goods coming to the United States in the automobile business?
I think over the long term, that probably might happen, but we have become so productive here. And I'll just cite an example. If you were to assemble a car in China today at zero labor costs compared to the labor cost and the productivity here in the U.S., the cost of transportation and the cost of that finished good in transport is really greater than the labor savings. So we are a very productive country right now. It takes about 15 hours in a really good plant to assemble a car, and with the restructuring of labor costs and the continued improvements of efficiency, that's a big hurdle. It's a very different hurdle than the Japanese and then the Koreans faced, and that's just looking at cost. When you look at terms of execution and what people demand in terms of refinement and all of the other things that are required to be in this market, it's probably going to be a while before the Chinese are here.
We're going to leave it there. David Cole, thank you so much.